What's up, strangers? Welcome to the Wealth Game Nation. My name is Vedo and I'm here to help you better understand the wealth game and become part of the Wealth Game Nation. In today's video, I will show you 7 dividend-paying value stocks that are currently on sale and that can yield over $1,000 per month. So let's get right into it. First, we will look at what are value stocks and dividends. Just a short reminder, if anybody is new to investing. Then we will look at top 7 dividend-paying stocks of 2022. We will look at the commonality that these companies all share, and then we will get into my thoughts. What are value stocks? A value stock refers to shares of a company that appears to trade at a lower price relative to its fundamentals, such as dividends, earnings, or sales, making it appealing to value investors. Value stock basically means you get more value for your money. Some characteristics of value stocks. Not all value stocks share the same characteristics, but here are some of them. And not all of them are true at the same time. Usually they have been around for a longer time. Usually do not grow rapidly. Usually pay dividends. And usually have a stable business model. Dividends. A dividend is the distribution of a company's earning to its shareholders. Dividends are often distributed usually quarterly and are usually paid out in cash. Sometimes these dividends can also be paid out in terms of in stocks as well, and sometimes they are paid out twice per year or monthly. So dividends are the profits that the company makes. The company can decide what to do with the profits. Either they can reinvest in themselves if it's a growth company, or they can decide to partially pay out or reward the shareholder. On the other side, we have growth stocks. A growth stock is any share in a company that is anticipated to grow at a rate significantly above the average growth for the market. The average growth for the market is under 10%. Some characteristics of growth stocks. Usually, they have grown rapidly in the past and are still expected to grow rapidly in the future. Usually do not pay dividends and they reinvest all their gains into future growth. They usually trade at higher multiples. For example, the price to earnings ratio. And then conclusion, both serve their purpose. One is not better than the other. So you need to decide for yourself what kind of investor you want to be, whether it's growth investing or value investing or a mixture. Now, let's get into my top 7 dividend paying stocks. We will look at the company, the sector, the part of the indices, dividend yield, stock price, dividend per share, number of shares needed, yearly dividend, and capital needed. From first company is Home Depot. It's in the consumer discretionary sector. It's part of the Dow Jones Industrial Average and the S&P 500. It yields about 2.6%. The stock price is about $290 per share. Dividends per share is about $7.6. Number of shares needed is 158 in order to achieve $1,200 per year, and the capital that you would need for this investment would be under 46K. Next one is Procter & Gamble. It's in the consumer staples sector, also part of the Dow Jones and S&P 500. Yields about 2.8%. The stock price is $130. Dividends per share is 3.65. Number of shares needed is 328. In order to make also around 1,200 per year, you would need almost 43K in capital. Next company on the list is 3M. It's in the industrial sector of the economy. It's also part of the Dow Jones and the S&P 500. It yields a proper 5.14%. The stock price is 116 at the time of the recording. Dividend per share is about $6, and you would need about 400 shares in order to make 2.4K per year. You would also need capital of 46,000. HP is the next one on the list. It's in the information technology sector. It's part of the S&P 500 index. It yields 3.75. The stock price is almost $27 at the time of the recording. It yields $1. You would need around 1,800 in order to make 1,800 in dividends per year. Also, you would need about 48K in capital. Pfizer, it's in the healthcare and pharmaceutical sector. It's part of the S&P 500. It yields 3.6%. The stock price is 44.5. Dividends per share is 1.62. You would need about 1,100 shares in order to yield $1,800 per year and a capital of 49,000. Ford Motor Company, it's in the consumer discretionary sector of the economy. It's part of the S&P 500, also yields almost 5%. The stock price is $12 and it yields 0.6% in dividends per share. You would need about 4,000 shares in order to make $2,400 per year. Also around 49K in capital needed. Last but not least is Stanley's Black & Decker. It's also in the industrial part of the economy. It's part of the S&P 500, yields 3.9%. Stock price is $82. Dividend per share is 3.2. Number of shares needed is 560 in order to make 1,800 per year, and you would need a 46K. This brings us to a total yearly dividend payout of $12,574 and an average monthly dividend payout of $1,048. Total capital needed would be 327K, and this gives us an average of 3.84 dividend yield for the capital invested. Home Depot, Procter & Gamble, 3M, Pfizer, and Ford Company are currently part of my personal portfolio. Now, let's look at the commonalities these companies all share. They are all strong brands. They all have pricing power. They all have strong advantages or competitive moat. They are all big companies. They have all been around for a long time. They are all part of major indices like the S&P 500 and Dow Jones Industrial Average. This list that I have put together is diversified over multiple sectors of the economy. They all have a long track record of paying dividends. They're increasing their dividends and doing share buybacks. Share buybacks is something that people usually pay less attention to. However, this is very important to pay attention to, because when a company does share buybacks, it increases the value of your shares or all of the outstanding shares. Also, if the company is doing share dilution, this is also taking away from value of your investing. Also in this list, there are no financial stocks. This is just my personal preference. I don't invest in financial stocks. Dividend yield is not too high. Also an important metric. Sometimes you have companies that pay a high dividend, or you have investors who are just chasing high dividends. This is also not very smart, because it may happen that the company is paying 8, 9, 10% in dividends. However, you need to make sure how much the company is making, how much money does the company have on the balance sheet, and if the company is able to sustain for a long time to pay this dividend. Because if they are not, they will need either to take on debt, or they will have to dilute, which is again taking away from your investment. A healthy dividend is somewhere around 3, 4, maybe even up to 5%. So I would aim for 4%. Now let's get to my thoughts. If you're interested in investing, if you're interested in learning how to invest in the stock market, you would need to do a lot of research. You would need to evaluate companies and investment strategies for yourself. If you're looking into the stock market, you will need to understand what are dividends investing, what is growth investing. You can have a mixture of those. You can do only stocks. You can do maybe ETFs or index funds. This is all related to the stock market. You need to understand your investment strategy, your investment time horizon, your risk tolerance, and so on. You also need to understand on a bigger scale what are different asset classes that you can invest in. It's not only stock market. There is also real estate, there are bonds, there are also alternative asset classes like art, cryptocurrencies, cars, jewelry, and so on. These asset classes do not produce value. These asset classes only appreciate in value. So you need to understand the difference between an asset that produces value and an asset that only appreciates in value. Once you understand what are the advantages and disadvantages, what are the yearly returns, long-term returns, you could make your own investment strategy. You can set up your portfolio, allocate how much money you want to invest into what is not interesting to you, and so on. I have a video on different asset classes that you can look into. Next, you can also check out my checklist for identifying wonderful businesses, as Warren Buffett calls them. I have a video on that. It will be linked in the description below. Now, my investing strategy is I always keep a long-term mindset. I never get out of the market. I always dollar cost average no matter what. And I do not waver from my long-term plan. Basically, the allocation that I have set up for my portfolio, I'm always keeping that allocation, not only the stock market, but over the other asset classes. Very small portion into alternative class, and most of my portfolio is in the stock market and real estate. So that's it for the video today. Thank you very much for watching. I hope you find value in this video. If you did, please make sure you share, like, subscribe to the channel. Also, if you have a feedback to the content, if I missed something in those companies that I have listed, if you have a different view, please drop me a comment. Thank you very much for watching, and until next time.